Well, once again, welcome to Talking Technical, and I hope that load shedding doesn't catch us, but let's kick off straight away with some of the requests. And the whole world is starting to look a little bit better, but the Chinese market is struggling. We'll probably have a chance to look at NASPAS or process during the show, and it just shows you that those markets are really under massive pressure. And once again, we learn that investors do not like any uncertainty. The moment there's a problem with the leadership or something is wrong on the regulatory side and investors are feeling uneasy, then they take their money and go. Well, let's kick off with Coca-Cola in America. First of all, the share was sold off since August from above $65 all the way down to $55. And I like this chart. First of all, you can see here that the trend was clearly to the downside. I just want to show you there. But it's interesting, you'll pick it up now the moment I show you. Look at the downtrend here. Well entrenched. Share was sold off aggressively, but now what do you see? A low, a higher low, another higher low. That is positive to me. So if you believe that the American markets can maybe even recover a little bit more, I will say that you need to buy as close as possible to that little level. There you are. That level is 56.58. If you can buy as close to that, that can suit you well, because it looks like there's a turnaround here. And my targets, all the way there is a big resistance up there. Just show you. Maybe it can go all the way back to that little level there. And that is sitting at 59.11. So maybe, let's hope it works out. And my stop loss here will be $55.10. Let's have a look at another one. Nike. The big shoe company in the world. They're one of the top companies. In actual fact, I think they're probably the top shoe brand in the world. Just want to remove that little line there. Can you look at this? Can you believe this, that the company with this magnitude? Let's go back. This share was $180 in November 2021, and now it's trading at 88. So it lost almost $100 in a matter of, you can say, 8 to 9 months. It just shows you that these shares were really hammered. Now, if I look at the chart here, momentum is still clearly to the downside. Let's just zoom it out a little bit. There you are. But right at the bottom here, we see a tiny little flag formation starting to develop here. Now, a flag formation can either break to the downside. Most people will say that if the share has been hammered like this, a flag formation is nothing else than a continuation pattern to the downside. Yes, that can be true. But for me, usually I say after a waterfall formation, I usually look for something that maybe give me a little bit of a bounce. So I'm going to be a little bit bullish on Nike, and I'm going to say it will probably break up. But let's give both scenarios. The one is, if it breaks below this $87.30, it can easily go and test this level right at the downside, and that is sitting at $83. So if it gets to $83, yes, we'll see a brand new low, and it can actually go lower. And it doesn't mean that it cannot go to 80. It can go to 80. But on the other hand, if this little flag formation right at the bottom break to the upside, and my level there is 89.52. If it breaks above 89.52, it can go to 90.25, 91.10, 93.60, and even back to that resistance of 95.79. My stop loss here, I'll make it a little bit of a tighter stop loss, 86.30. And the big thing is here, this share, we know that it is under pressure now, but I'm sure that the company will survive. That is the big thing in a market like now. If you look at the company and you like the company, you must also say to yourself, can this company survive if things really turns out to be ugly? We know that inflation is a problem. Usually with higher inflation, people don't buy apparel like shoes and clothing. They tend to hold back a little bit. They focus on foodstuffs and stuff that is necessary to survive. But if I look at this share and I say to myself, the company is sitting on probably good cash, I didn't check that. The company is probably paying a dividend, and will they survive? And if you believe that they will survive, I think you can maybe look at this company. It's like Coca-Cola. Will it really go under? I doubt it. Well, let's go to the other share, British American. I mean, this is one of those old stalwarts in the South African market. Most of their income is coming from abroad. They're wonderful randage. They love a weaker rand. And what do we see here? Even in these troubled times, we see a share that's been in April as low as 602. It's trading now at about 700 rand. It tells you that it follows the rand. They still make some good profit. And I cannot see that they will go under as well. But the big line here is, I think, is this top resistance line. If you haven't got the share, I think maybe it's good to wait for the share to break above this line, and that is at 722.30. And what do we see? If I combine these two spots here, then you see a beautiful ascending triangle. Now, an ascending triangle is usually a continuation pattern. And I mean, if that level of 720 breaks, it can easily take this stalwart. Let's take it higher and see where it can go to. Of course, what do we need here? We need a weaker currency. We need a weaker currency in the future, because British American Tobacco is nothing else than a wonderful rand hedge that pays some good dividends. They're sitting on a good management team. And I mean, where can the share go to? It can go back to 810 rand. If this ascending triangle breaks to the upside and it goes higher. There's something else that I would like to mention to some viewers. We trade on a day-to-day basis in the Aussie or the S&P 500. And if you are trading, it's sometimes not such a good idea to look at these massive moves. Say, for instance, you decide that you want to buy above 723. And now you've got this big, beautiful level of, let's say, north of 800 rand in your mind. For me, it's quite simple. If you trade from level to level, or support or resistance, or a percentage. If you make 2% or 3% or 5% on your capital, you cannot get wiped out. So if you like a share, if you trade in the share, if you haven't got a long-term view and you've got a short-term view, rather look at your setup, get in at the level where you need to get in, decide your stop loss. In this case, this stop loss is going to be a little bit big. If you buy above that, I'll use that as my stop loss, 705.20. Then you say, okay, if it breaks up and it goes to 740 or 745, I'll be happy to lock in my profit. And then you just simply lock in your profit and you walk away and you say thank you and you look at another opportunity. I mean, this is now just a long-term view of British American Tobacco. Nice rand hedge, and I hope that it plays out for you. Let us look at process. I mean, the Chinese market, I think, is down 35%, I think in 6 weeks or 4 weeks. I've read it somewhere. It's on levels seen in 1997. First lesson there. Always remember that markets can go longer than what you expect. They can maybe go much lower. And what do we see on Process? Can you believe that Process was a wonderful company? Nothing was wrong when it was trading at 1,200 rand, and that was in July 22. That's, let's say, 5 months away from now. And what did we see? Since then, a double top there. There was the top. There was a top, classic double top. This double top came into play when that little level broke. Look what happened. It worked hard to sort this level out. But since then, lower highs all the way. And then what did we see? We saw this ugly candle, this Marubozu candle, with this ugly gap. It can easily be called an exhaustion gap. But what about it? Also can tell us that it can maybe be still some more downside. I know a lot of investors would like to buy it. If you believe that the company is a good company and you want to buy it and you've got a longer term view, maybe you can buy. But this gap is not a fundamental gap. This is a emotional gap. It is on the leadership of what we see in China. When investors got nervous, they just said, let's take our money, let's get out of the Hang Seng. And of course, Tencent is part in the Hang Seng. And what happened? Tencent was sold off, I think, 13%. And on this particular day, last week, on the 25th of October, it is just a hammering. I mean, it was 15% down at one point in time. So I will be a little bit cautious here just to go in and buy. I'll wait probably for a beautiful reversal candle here, maybe a tiny little hammer or a harami with a long lower shadow. I'll wait for this to show me a little bit of confirmation before I get in. If you do get in, use this stop loss. Stop loss will be 732.01. And if you do get into the share, I mean, there's many opportunities for this share to go a little bit higher. The first gap will be between, can you believe it, 732.01 and the low there's 867.62. Wow, that's almost 100 rand gap that you can look at if this share starts to recover and it starts to move higher. So process been hammered a lot. Same with Naspers, but I'm just using process here because we're almost running out of time here. But the big thing is clear waterfall formation. What is the best to do in a scenario like this? Wait for a reversal candle to actually give you an opportunity to show that there's some other investors getting into the share. Don't just rush in and stick to your stop loss. Well, thank you for watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.